Hey everyone, welcome back to our news trading session. This is session number 2, theory and practice. Let's do a quick sound check. Let me know if everything is alright and then we'll get started. All right, sounds good to me. But yeah, let's get tonight's session started. It's news trading session number 2. We're going to talk about some theory and practice. And I will try to get some examples in for tonight. I do want to talk about the limit orders, especially for this week. So my name is Vida in general. Let's get started with a quick disclaimer. Any opinion discussed in this webinar or link to this presentation is provided as a general market commentary and does not constitute investment advice. News trading involves risk due to high volatility. Market reaction to news can be swift and unpredictable, which leads to higher trading risks and delays in order execution. So be very attentive when determining the volume of your transactions and consider all possible risk factors. Now, the last disclaimer here, it's really true, especially when you're trading the news. We have experienced a lot of movement. Sometimes liquidity just dries up and sometimes your orders doesn't get filled at the price you want and whatnot. So be very careful. Don't think it's kind of like a quick hit in the market and you can just get away with a huge position and you're going to be all right. So a lot of people actually make that mistake. So I do want to stress out the last part here. All right, so as per usual for the news trading series, you're going to get a promo code TW deposit bonus, and you should have access to the private Telegram channel if you registered through email or have attended our previous news trading sessions. So you should already have access to those. Okay, this is the code for TW deposit bonus. It's non-found 2024, so make sure you are using the code when depositing into your Octa trading account. It is valid until the 31st of December. 2024. All right, so a little bit about myself, just very quickly. I've been a full-time trader with over 20 years of experience. That's 20 years of full-time trading, not part-time trading. Professional trading coach and technical analyst for a couple of big brokers out there since 2007. Experts in the Ichimoku Kinko Hyo technique, especially in Australia. I get to kind of popularize Ichimoku Kinko Hyo in Australia. So I've also been invited as a guest speaker at Trading and Investing Expo across Australia, Invest Fair in Singapore, as well as the ATA and the APTA conferences, which is the Technical Analyst Associations in Australia. All right. So again, tonight's going to be theories, right? So we'll talk about the advantages and disadvantages of news trading. I do want to say, yeah, sure, news trading can be very interesting, right? A lot of people are interested in trading the news. But that it comes with risk as well, so you kind of need to weigh out the options here. Obviously, we're going to talk about both sides of the coins here. There are going to be advantages, and as per anything, there's also going to be disadvantages. So we're going to take a look at it from a neutral perspective, right? And then we're going to talk about the most profitable news for trading. What kind of news out there, and then we'll focus on the 3 main phases of price movement. This is not limited to news trading, but it is very important, especially if we want to trade the news, that we understand what's actually going on before the news gets released, during the release, and after the release, okay? There are going to be some general rules for news tradings, and then we'll talk about the pending orders, right? And as per usual, we will talk about the buy stop and sell stop strategy. This is something that we use during the NFP sessions and the upcoming CPI session on Thursday, 11th of July. And then we'll take a look at the limit strategy. And, there are a couple of examples here in terms of how to use the limit strategy, especially for this week. It is actually pretty useful. So I do want to touch base on that. And any questions to, if you guys want to ask about the limit strategy, because it's not very often that we get the opportunity to explain the limit strategy, because it is highly dependent on the market condition. And obviously, it doesn't suit every occasion for news trading as well. Okay. So we'll also take a look at how to trade after the news is released. Okay, So let's just jump in very quickly to the advantages and disadvantages of news trading. We'll go with the advantages first. There's already a question for that. I'll answer that very soon. All right. All the necessary information can be found in the economic calendar, right? So there is no need to delve deeply into technical and fundamental analysis. Now, I do want to point out news trading, it's not fundamental analysis, right? Fundamental analysis is a completely different thing. Fundamental analysis, we do take in a lot of things that we need to factor in. News trading, it's really trading the reactions of that news release. That's pretty much it, right? So we're just riding on that short-term volatility in the market, and that's basically what we call news trading. It is not fundamental analysis. Fundamental analysis takes some knowledge, right? It will take you some time to understand and kind of figure out all the puzzles there. But with news trading, it's if you get the idea that it's not fundamental analysis, then it's actually a simple thing, right? We're looking at the sentiments, we're looking at the initial reactions to that release, and we just want to take advantage of that short-term volatility. And at the very same time, it is also not necessary for you to delve too deep into the technicals, because as we talk about the disadvantages later on, we do want to exclude some of the technicals here. If you understand the technical framework, then yeah, it will help you in terms of positioning yourself or in terms of managing a risk. But the news release itself, it's well, you can attribute it to technical analysis, but it's not going to be like, oh yeah, accurate technical analysis, it's going to be super accurate during news releases, because sometimes it just doesn't click, right? The sentiments just went all the way around. So will news take a candle to a zone? And if it does, will the order flow still be respected if we spot it at the downside and the news is taking the candle upwards? Okay, I'll need to, can you reframe that questions? Because I'm trying to figure out what it is. Will news take a candle to a zone? And if it does, will the order flow still be respected if we spot it at the downside? So we are talking about an order block as a support, right? A bullish order block. Are we talking about that? Right? And is it going to be respected? And the news is taking the candle upwards. I'm not quite sure what's going on here, but if we spot it at the downside and the news is taking the candle upwards, if you saw the news reaction that it bounces off from a certain order block, for example, or a support area, then yeah, we would attribute that as a potential for the news to affect that bounce, right? So I'm guessing that's what you're saying, right? So I'm trying to frame this for everyone, but this is how the question is, right? If we saw market above that order block and then the market comes down, right, during news releases, hits that order block and it bounces up, right? During news releases, it was basically around the order block. News gets released, it goes up, right? Obviously, it depends on the context, right? Because if we take a look at that reaction, we would assume that news would be beneficial for that currency, right? For example, economic data for the US might be good. Or maybe if you're looking at the upcoming CPI number, we get a stronger inflation number, right? But market is pricing in for more of a downward push because they're expecting the inflation is going to cool off, right? But we get a higher inflation number, for example, on Thursday, then yeah, it could bounce off that, and we can attribute that to the news. We will take a look. We actually want to discuss this. This is actually a very interesting question because this is basically the essence of what it is tonight. And this is actually an opportunity that I want to talk about for the CPI numbers, because we want to count in what the market is expecting, and what if the inflation comes in stronger than expected. Then we are going to be looking at that scenario. Then we want to use a limit order, okay? But yeah, we'll get there, and I'll give you some example. If you guys are new here and you just are like wondering what is this guy talking about, I'll show it to you once we get to the practical sessions, once we get to the limit orders, and then I'll show you what I mean by that. Okay? All right, let's continue first, and be sure to ask questions, right? I like my webinars when a lot of you ask questions, right? You don't have to wait for the Q&A sessions. Just type it in, and we can discuss it as we go. I prefer doing it that way. Okay. So second point, second advantage, events in the calendars are ranked in order of importance, which helps in making adequate decisions. You can kind of pick which news you want to trade, for what country. For example, European CPI, right, probably doesn't have a huge impact on the Aussie USD, for example, right? But it will have an impact on the Euro Pound, it will have an impact on the Euro USD, it will have an impact on the Euro AUD, for example. But, it's obviously regional, right? And this is why you need to understand, what news are actually going to be important. Is it going to apply to your currency? For example, yen crosses, as I always say, they're a little bit unique. That's why we don't actually do yen crosses during the CPI and the NFP release, except for the dollar Japanese yen, because they function on a different fundamentals, right? They are not directly impacted by news like the NFP, the CPI, right? They are impacted by other things, okay? So yeah, we can rank, how important those news are, and then we can make that decision. For example, services PMI versus manufacturing PMI, right? These two, which one is going to be more important? Both are going to be ranked as high impact news, but I can tell you manufacturing PMI has a much bigger impact than the services sector, okay? So yeah, small little things like that, but you get to make that decision, what news you want to focus on, right? Publication of statistical reports noticeably increases volatility, allowing traders to potentially earn significant profits. This is actually the defining factors between an investor and a trader. If we look at it from a perspective, from the lens of being a trader, we want that volatility. If the market doesn't move, if there is no volatility, then it's actually hard for us to take our profits quickly, okay? And things can change, right? If we take a look at a technical outlook, for example, we have an entry, right? We need to act on that. Obviously, once we act on it, we want the market to move in our direction, right? Either in our direction or against us, but we want that answer very quickly. Traders are just not designed to wait patiently, right? Especially intraday traders, they're not designed for that. The longer they stay in the market, the more they are affected mentally, all right? If they hold on to their positions and the market doesn't move, there's no volatility, then you're going to start getting some ideas in your head that says, maybe I'm not doing it right. Maybe my analysis is wrong. Market is not moving. The longer you stay in the market, the more you're going to worry, and that's going to impact your mental health as a trader as well. Okay, so we want that volatility, and obviously in news releases, the market does move significantly. If you get it right, okay, then yeah, you're going to see a very quick profit. But if you get it wrong, obviously that could be a quick drop to your equity as well. So the next advantage is the simplicity of the strategy. You just have to know how to open and close the orders without the need to learn any complex formulas. And this is very true, because if you have attended my previous live trading sessions, we actually don't use any technical indicators. We basically cage the market, right? And we create our pending orders, and once the news gets released, it's pretty much just on the run, right? That's pretty much it. It's a very simple strategy. I don't think there's actually a lot of rules to it as well. You don't need to understand how to look at Fibonacci properly. For example, you don't need to understand a multiple moving average or how Bollinger Band works. But if you have that knowledge, obviously that's going to help, right? Because you can skew the probability to your side. But if you're new or you're not well versed in the technicals, for example, then yeah, I think the rules for the strategy itself is actually very easy. Okay, last advantage, minimal time expenditure on your trading. You know exactly when to access the trading platform, what actions to take, and the trading process itself can be completed in just a few minutes, right? I think that's an advantage to news trading. You for example, typically on a typical days, we are going to get a news release from the US in the next 15 minutes, right? So we could be on standby right now, just looking at the chart, just preparing our orders. In 15 minutes time, there's typically going to be a news that's going to get released, and that, so we know when we trade every single day, we're anticipating a news release from the US. If I'm focused on the US dollar itself, then yeah, what is the best time for me to trade? The best time for me to trade is actually this hour and the next hour, because news are going to get released during this, early sessions in the US. So yeah, you don't waste a lot of time, right? You don't just hang around every hour just to check on the candlestick. Does it close? Does it not close? You can be on standby during news release. So I think that's an advantage. All right, let's talk about the disadvantages. Okay. Number one, market situation doesn't always develop as predicted by logical thinking and common sense. So let me give you an example on last Friday session. Okay. So last Friday, what do we get? We were waiting for 3 sets of data. This is just this is actually what happened last Friday, actually. So we have the NFP number. The initial release for the NFP number was that it was higher than consensus. It was at 216,000. Consensus was 190,000. So it is higher than consensus. But then we had a downward revision from the previous month. So the initial reaction was that, yes, the US dollar was stronger. That was the initial reaction, right? And then everyone starts figuring out that, hey, there was actually a downward revision of the previous month. So the number was actually revised down. And then the unemployment rate goes up. So the labor market is actually not doing that great. What happened after that was we basically have, for example, I'll take the Euro USD, for example. So the Euro USD fell, and then it immediately spiked back up because everyone just starts realizing what happened with the unemployment rate, and it stabilizes for half an hour, right? The Euro USD doesn't go up or down. It actually stays within the range until about an hour or two after that. Then it starts moving up, right? So, does it make sense? If we take a look at it, if you don't understand the fundamentals, it wouldn't make sense to you. But if you understand the fundamentals, then yeah, it would make a lot of sense, because the concern was that the unemployment rate was a lot higher. It surpasses the 4%, kind of limit per se for this year in the US. So will it make sense? Sometimes it makes sense. Sometimes it doesn't make sense, because the sentiment really depends on whether or not that news itself has been priced in. Okay. So if everyone, and this is the reason why I want to use that limit strategy for this week. Let me just give you an example on what could happen on Thursday, right? Everyone is anticipating the inflation number to cool off, okay? So on Thursday, if the inflation comes out as expected, and the past few days we saw the US dollar weakens because everyone is already pricing in for that. If it comes out as expected, at 3.1%, then the logic would be, hey, inflation is coming off, but at the time it's released, the US dollar could actually get stronger because the news comes out as expected, and the past few days everyone has already been pricing in for that. Okay, so if you don't understand the fundamentals and if you're not experienced in news trading, it will come across to you that it doesn't make sense, right? How could the news release is as per consensus, but the US dollar could get stronger? Because there's something that a lot of traders don't factor in, is that it could have been priced in by the market. Okay, now the other disadvantage, as I said, it's not all news can cause a significant market reaction. As I said, with the I'll break it down in two parts, right? Number one, we can actually filter news by whether or not it's a high impact, medium impact, and low impact. The low impact and the medium impact typically doesn't have a huge impact into the market. It probably wouldn't move the market. Now, what's labeled as a high impact has a different set of momentum as well. PMI manufacturing, a lot more traders are reactive to the manufacturing data. The services PMI, typically a lot of traders don't react to it unless it's a huge disappointment, like last week's services PMI number. Okay, even though both of them are PMI numbers, a lot more focus is put on manufacturing. So even though they are labeled as high impact, they don't have the same impact. So you need to understand which news even though they're labeled as high impact, could really move the market. Okay, and this is the reason why a lot of traders, when it comes to news trading, they look at CPI numbers and they look at the NFP numbers, because no matter what, they will have a huge impact into the market. Okay, it will move the market significantly. Okay, now the other negative that I want to talk about when we talk about the volatility, obviously, if it's in your favor, it's okay, right? It could move in your favor. You can gain significant profits, but at the same time, if you get it wrong, it will actually be a significant loss to your account as well. And this is why I put out that extra warning at the beginning, that you need to understand and be very careful with the volume when you open the position during news trading, because a lot of people thought, news trading is easy, or it's not hard, right? But you always have to manage your risk. You can't just, let's say, use up all your margin or your equity just to open one trade, for example, during news releases, expecting a huge profit just from that one instance. That's not a healthy trading behavior, okay? That's not a healthy trading pattern that you should take, okay? So don't do that, because if you get it wrong, that volatility could hurt your equity. And unfortunately, a lot of traders got margin called during news releases. Okay, so be very careful, be mindful of that. And I think this disadvantages could maybe equal 3 of those advantages on the left side. Okay, so just be mindful of that. Okay. All right. So I'm gonna go through very quickly here. With what news to trade. Obviously, all news are going to be divided into 2 categories. There's going to be that hot, unexpected news, including terrorist attack, military conflicts, and natural disasters. And during such times, national currencies become much stronger as investors kind of get rid of stocks which are about to fall. Okay, so with the currency as well, it could impact that as well. Now, recent development in the market, obviously, geopolitical tension was kind of okay for the past 2 months, I would say. It's heating up again. Conflicts in Israel and Palestine, obviously, it's intensifying, and there were missiles being launched in the past day or two. At the same time, in Ukraine, with Ukraine, Russia, again, it's heating up again. The children's hospital was just attacked. It's a very sad thing. And obviously, this could kind of elevate a lot of the geopolitical tensions. Now, these are what we call hot news. These are unexpected news, right? Natural disasters, those are going to be unexpected news as well. These are news that could come and impact the market. That is actually not planned, right? The term for this, we could actually classify this if we talk about risk management. This is what we call a systematic risk, okay? So this is a systematic risk that's attached to the financial market, okay? So yeah, hot and unexpected news. If you get the news early, if you pay attention, you keep an eye out on that, you can react to it quickly, to your advantage, obviously. But at the very same time, if you're shorting the US dollar and then all of a sudden it's geopolitical tension heat ups, or maybe you're shorting gold, for example, or, oil, and then this news might have an impact on those, because gold and US dollar are considered safe havens, right? So they could drive prices up. So it could have a positive impact or a negative impact. If you know what you're doing, then you can act on it. If you're new and you have no experience on how this unexpected news could impact your trading, it's best to be very careful when trading during the day, right? When these events happen. So just be mindful of that. Now, the periodic news, these are the news that comes out regularly, right? For example, we talk about the BLS, or the Bureau of Labor Statistics in the US. They publish a calendar every single year, so we know when inflation number is going to get released, when the labor data is going to get released. These are scheduled releases. Now, if you're trading the stock market, earnings seasons just started, right, in the US. So these are scheduled events as well. So when they're going to get released, on what day they're going to get released, pre-market, after market, and whatnot, right? Talks about central bank meetings, for example, and monetary policy decisions. If you take a look at your chart, there's a lot of movement. There's a lot of buzz with the yen crosses the past 2 days. Why is that? because there's a scheduled meeting by the Bank of Japan with bond market participants in terms of how they're going to taper the bonds in Japan this month. So a lot of movement in the Japanese yen because there's a scheduled talks between central banks and market participants, right? Monetary policy decisions, when central banks are going to be hiking interest rates. Obviously, if you're trading the forex market, you'll be focused on the FOMC, the ECB, the Bank of England, the RBA, right? The Bank of Canada, central banks like that. It will have an impact, right? Forex market reacts to them when they raise and lower interest rates. Quarterly GDP reports. We're talking about fundamental analysis here, obviously. Quarterly GDP reports have a huge impact into the market. Inflation index, CPI, PPI, right? CPI is going to be a release on Thursday, PPI on Friday. These are going to have a huge impact to the market, but these are scheduled events. You know when they're actually happening, right? In fact, we can schedule a live trading session for the CPI event because we know when it's actually going to get released, right? So index of business activity, ISM manufacturing PMIs, right? ISM services PMI, for example, flash manufacturing PMI, flash services PMI, those kind of data. Unemployment data, labor market, we saw that last Friday. These are scheduled releases, so there's actually a set timetable. So you should be aware that news are going to get released during this session. Even if you don't want to trade the news, right, at least be aware, because if you don't know that news is going to get released, for example, in the next 2 minutes, if today's on Thursday, CPI is going to get released. It's going to have a huge impact to the market. If you open a position right now, obviously you're open to that risk that the news could be, moving in a certain direction very quickly. So you should be aware, because the worst thing is, and I don't mean it in a bad way, a lot of new traders, they have no clue that the news is going to get released. They open the position and the news takes it the other way. And they were yapping, they were blaming it on technicals, they were blaming it on the brokers, but they should have figured it out that there was actually a major release that's going to get released. How is it going to impact their market, right? That's how they're going to impact their trading. So a lot of new traders are not aware. So I think when we talk about trading, you just need to be aware on when something is actually going to get released, right? So either you could plan for it or you stay out of it, right? Simple as that. Okay. All right. Now, why Octa remove MT5 or they will be against start MT5? I am on MT5 right now, so it's still there. This platform is still on MT5. Okay. Anyway, let's talk about 3 main phases of price movement. Number 1 is going to be the accumulation, and the most informed and forward-thinking insiders trade here. So the big funds are going to be taking positions in that accumulation phase. Typically, this is before the news gets released, right? And this is why it's actually very important that we have that accumulation phase. If there's no accumulation phase, then it's actually really hard to read the news trading, right? Number 2, participation. These are the technically driven traders that enters when price starts breaking out of a certain range, right? For example, immediately after the news gets released, the participation stage happen, and then it rallies up. Public or everyone that gets the news late or read the information late, they look at the prices going up and then they start thinking, oh, I better jump in right now, because if I don't, then I'm going to get left behind. But this distribution phase, it is a really quick, sharp rise. It is actually used by the big funds or smarter traders to get out of their position that was accumulated during the accumulation phase, right? So accumulation phase, people with the know-how, they get in there. Participation phase, if you are quick to that, have some experience, you jump in on the participation phase, right? And then the distribution phase, we just want to get out of a position. We don't want to enter when there's already a huge movement in the market. Just be mindful of that. Okay? So, general rules for news trading: study the market and analyze the dynamics of the particular currency pair. For example, as I said, the CPI release, it's going to impact the dollar yen directly, but it will not have a huge impact on the euro yen, euro pound, sterling yen, for example, because they are cross currencies. They're not really directly impacted by what happens with the US dollar. Okay. Assess the reaction of a currency pair to that latest news as well, and then prepare for trading by marking relevant levels on the chart. So you kind of need to know where the support is, where the resistance is. If you open a trade, where are you getting out, right? Where's your stop loss? Where's your take profit level? Okay. And then you need to decide on your trading tactics, including when to open and close that order. Is it going to be before the news? Is it going to be after the news? Or are you going to wait an hour after the news release? Or maybe you're going to skip the day? You got to think about it, right? Obviously, you need to choose the appropriate trading time frame. If you're trading during the news release and you're looking at the daily chart, obviously it doesn't have an impact. You need to jump down on a small time frame, hourly time frame, 50 minutes, 5 minutes. They're more appropriate for news trading. Okay. Determine the maximum risk for each order, and then consider using stop losses or maybe trading stops once the market is already moving in your direction. Just be mindful of that. Then you need to decide on the terms of the deal, right? Is it going to be a quick trade? Are you going to stay in there for maybe a minute or two or maybe 5 minutes, right? With our news trading sessions, it's ideal that we get out as soon as possible. I don't really like staying more than 5 minutes, but the past few months, market condition obviously says otherwise. So we traded in the first half hour, but typically we want to get out as quickly as possible, right? Some traders, they might open a position during news releases and then they say, you know what, I'm actually going to hold the position for maybe a day or two. So you got to decide on that. Okay. All right. So let's take a look at the pending orders, right? We've got half an hour to go. Let's take a look at the pending orders. So we have 4 different types of pending orders. Number 1, it's the buy stop. All right, so if you look at a buy stop, these are order placed above the current market price and you anticipate price to continue to go up, then yeah, you want to have a buy stop. It means when it hits that limit, when it hits the stop, it will open a trade that goes long. It will open a buy position. All right, sell stop, the sell stop here is orders placed below the current market price, right? If you anticipate a support to be broken, then you want to place that sell stop orders pretty much below the support. Once that support is broken, then yeah, the sell stop is going to get triggered. You are in a sell position. You anticipate the market to go down. Okay. The sell limit is placed above the current market price, but what happens here is exactly the question that was asked just now. If we are here, right, and market gradually moves to the upper resistance, right? Let's say there's an order block up there, for example. We anticipate that order block to hold as a strong resistance. So you could place a sell limit at that order block, all right? Once price goes up to that and the news gets released, that resistance could function. That resistance could act as a proper resistance and market is not able to break through that. There's going to be a sharp rejection. That's where you want to place that sell limit. Okay. On the flip side, and basically answering that question earlier, the answer to that is obviously the buy limit, right? So we place an order below the market price because I will look at that and say, you know what, where price is right now, it's not too low. It's not enough. We need that to move lower towards the support area, and we anticipate that bounce to happen around the support area. So we want to place a buy limit around the support area. So if price hits that support, then our analysis says, yes, price is going to bounce off the support. Then we want to use a buy limit. Okay. All right. Okay. So let's take a look at the buy stop and sell stop strategy first. Okay, so we want to look at a consolidation phase, and this is the accumulation phase. It means, right, typically what we normally do with our news release, we want the market to create a small range. I want it to go in a sideways range before the news get released. It's the calm before the storm. It's also what we call the corridor of volatility. It is what we would consider an accumulation phase. All right. So with the accumulation phase here, it's not hard, because if you take a look at the example here, if you take a look at the chart here, right? So you know, look at that. Price is actually just moving in a range bound market condition, right? So there's a high and there's a low that you can look at it, you can focus on it, and by doing so, you know where the limits of the market is. And by looking at that, it means there's going to be a support, there's already a support in place, there's a resistance in place, and this happens before the news gets released. What it means is, once the news gets released, it will break one of those sides, right? So it could break the upper resistance, and if it does so, then we want to have a buy position, because it could break and then just rally up. Or if it breaks to the downside, then we want to have a sell position. That's why we use the sell stop. So think about the buy stop and the sell stop kind of like a cage, right? It's kind of like a barrier, it's a limit. Once that stop orders, kind of the roof get hit, for example, then you expect price to just shoot up. If the floor gets smashed, then you expect to fall down really quickly. So this is basically what happens here. So we have the buy stop, and we have the sell stop. And what's interesting here is that, as we normally do with our NFP and CPI release, we actually have two pending orders before the news gets released, right? One is to buy, the other one is to sell. But we place these orders above and below the current range. So when we saw the breakout happen, market rallies, you don't have time to react on those news, right? Like what we normally do during our live trading sessions, we typically have an order on about 4 currency pairs. Can you click on all 4 currency pairs during news releases? No. So you got to make a decision, you got to choose, right? But if you use the stop orders, then you can actually take part in all 4 currency pairs, for example, right? So once it's activated, okay, you need to close the other order. This is basically the normal procedure, because if the buy trade gets hit and then you have that sell stop hanging around there, what if the market goes down and hits the other side? It does happen to us a couple of times, right? Even with my 20 years of full-time trading, I can't stop that from happening. A whipsaw could happen, it could take both sides. Now, if that's the worst case scenario, because once both sides are taken out, it means you are locked in a negative price, right? You're locking in with a negative loss in your account. So just be mindful of that. So you have to act very quickly. If a buy or stop is triggered, you need to cancel your sell stop, okay? And obviously you still need to have your stop loss and whatnot, so make sure you understand what's going on. But the beauty of this is, once price rallies up, right, and it goes really quickly, because the volatility window, it gets really quickly. Once price pushes beyond your stop orders, the best way to manage your risk is to move the stop loss to break even to your entry price. Then it becomes a risk-free trade, right? This is the only time when it becomes a risk-free trade. When you can move your stop loss to break even, that's when we would consider them as a risk-free trade. So just, I would recommend you guys doing that, or you can just get off the trade, as quickly as you can. That does help out as well. But if you have a trading plan and you have a certain limit, a target limit that you want to aim for, then yeah, you can move your stop loss to break even. Just manage your risk, right? Okay. So I'm gonna go to the chart now, and I want to show you how we actually look at the stop orders. Okay. For this, right, you want conflicting news, take both position out. Yes, unfortunately, and that's basically what happened here. So let's go back to Friday, right? This yellow box, that was Friday. So what happened with that Friday is that if there's a mixed data, let me stop this from scrolling further. This is basically what happened last Friday. So maybe, you know what, I'll go into the 5 minutes time frame here just to show you what goes on. Okay, so see if I can zoom in, right? I still can zoom in, yep. Okay, there we go. Take a look at this candle here. This was the corridor of volatility, right? On last Friday when we were trading the NFE. And what happened was, obviously, we had a conflicting news, right? We have the NFP goes up, and then the unemployment rate also goes up. So with the market reaction, you can see what happened with the Euro USD. It went down and it went up. The problem with this is, if you're not quick to cancel the order, then you're gonna get locked in here. You're gonna get locked in about 15 pips. Yeah, about 15 pips. Because your buy stop is going to be there, your sell stop is going to be here. Then yeah, you're going to be locked. This is something that we try to avoid. This is why we need to close out one position and just have one position. The other one, we just move it to a stop loss. Okay. So yes, that's a very good observation. That's obviously going to be part of the risk with news trading as well. But yeah. It is very true that you could get, kind of hedged out, I guess, if we look at that. Now, for now, I don't think the 50 minutes on the euro is going to be a good example. Maybe on pound USD, for example, right? If we take a look at what the corridor of volatility is for the pound USD, we would consider this to be the resistance, right, for the pound USD, which is probably about there. And then for the support, this is probably more apparent that it's going to be, closer to 1.28, but it ranges, it does push down a little bit lower to about 1.2795, right? This is just an example, but let's say in the next 2 minutes, a news is going to get released. What can we do with this, right? So with the sub orders, I want to look at this, corridor of volatility, and I would say, you know what, I will open a buy stop. So I'll just right click and I'll click on a buy stop just above that range there, right? Above that swing high, for example, and I could create a sell stop just below this swing low here. Okay. So once the news gets released, obviously, if we take a look at this, and price breaks lower, then it's going to trigger our sell stop, and we can target, somewhere lower than that, for example, right? Typically, we will measure it. The difference between the buy stop and the sell stop, it's going to be our range. That's going to be 36.4. So from the sell stop, typically the strategy that we use, we want to go for a 1-to-1 risk reward ratio, right? So 36.4, that's about 1.2755. So maybe about there, right? That's going to give us a 1-to-1 risk reward ratio. Okay. Let me just clear this off. Okay. So yeah, if we had that sell order, then we want to target this area, and then the other side, right? Always place your stop loss at the other orders. Okay, so we have a sell stop, then your stop loss is going to be the buy stop. If you have a buy stop, then your stop loss is going to be the sell stop. And we always go for the 1-to-1 risk reward ratio at the beginning. Okay, if the market gives it to you, then yeah. If the market doesn't give it to you, you need to react very quickly when news trading. You need to figure out the sentiment. If there's a shift, right, in the sentiment, if there's a wrong reading in the market, then you need to act very quickly as well. Maybe you need to change your plan and you need to get out of that trading position. So be mindful of that when news trading. Is this trading strategy more effective for only CPI and PPI? It's effective for CPI. It's actually effective for all news trade. I'll be honest with you. With the NFP, it's actually effective, but you need to be very careful because we typically look at a potential fade during the NFP, right? CPI, it's one more in terms of direction. It's more one directional, so it's okay for CPI. It's okay for interest rate decisions. PPI, we don't actually see a lot of volatility during PPI. Unless, the CPI number is kind of a little bit vague and everyone is like, okay, we need to look at the PPI. So PPI is situational. But yeah, this strategy, it's designed for all news, all right? So it's not just limited to the NFE and CPI. It's just that we we only have the live NFP sessions and the live CPI sessions. But if I were to do a live PPI sessions with you guys, I'll probably be using the same strategy as well. So yeah, it's not limited to just the CPI and the NFP. Okay, so that's stop orders. Now we've got some time. I want to focus on the limit strategy. So with the limit strategy, it comes back to the first question of tonight's session, right? When we talk about, if there's a support, there's a resistance. Take a look at this chart, right? Take a look at this chart, and we have that local previous high, right? We want to label this. From this side, we're creating a little bit of a nodal block, right? Or a resistance area. So what happened with this, that area that we boxed there, the kind of the pinkish zone, this is where price is before news gets released, and we create a sell limit or a pending order at that resistance. And the logic behind this is, what if after news gets released, market goes up and hit that resistance, but you as a trader, you anticipate this resistance to function, you anticipate price to fail at this resistance, right? This is why we create a sell limit. So a sell limit is an order above the current market price where you anticipate if market gets there, it's going to fail and it's going to come back down. Okay, so this is basically what happens. All right, take a look at this example here. Take a look at the spike there. Market spikes, hits the sell limit, and then it opens a short position and it quickly drops down. Notice one thing here, right? Let me go back a little bit. This one here, the stop loss, all right, for this one here, the buy trade there, the initial stop loss, if you have a buy trade, is going to be at your sell stop. So the risk here is more 1-to-1, okay? But the limit strategy, if you take a look at this, because you're buying this at the very top, sorry, you're selling this at the very top near resistance, or you're buying it at the very bottom near support, your stop loss, it's going to be small. It's going to be really small. It's going to be really close to the resistance because you're buying it on the assumption that price is going to fail around that resistance. Therefore, your stop loss is not going to be really far. This provides you with a huge risk to reward ratio, right? So just be mindful of this one here. We're looking at a risk reward ratio of maybe 1-to-2, right? Or a lot more than 1-to-2, I'll be honest with you, because your placement, your stop placement is going to be very close to your entry, right? Logic would say your stop loss is going to be near that resistance, but your entry is also near that resistance, so it's going to give you a minimal risk in the market. There is a trade-off, obviously, because you're going against the initial run in the market. You're going against the trend. So just be mindful with the limit strategy. You're going against the trend, okay? So let's take a look at the limit strategy for this week, right? So I'm going to go on a higher time frame because we're anticipating the Euro USD, for example. Let me go back to the trading view just so I can give you a little bit of a picture on what we normally look at. So with the Euro USD, we are approaching a little bit of a resistance, right? If we take the assumption here, because if we go by news releases for tonight and tomorrow, there's actually a news that's going to get released in about an hour's time. That's going to be the testimony to the housing committee. That's going to be today. That's going to be Jerome Powell, and then tomorrow as well. All right. But let's say on Thursday, we're anticipating the inflation number, right? The inflation number is expected to drop from 3.3 to 3.1%. So what is the market consensus? Market consensus is inflation is going to cool off, dropping from 3.3 to 3.1. That would weaken the US dollar, right? And this is why we're looking at the Euro USD gaining in the past 2 days. But there are adjustments that goes on right now. What if that number comes in higher than expected? So let's take a look at the Euro USD. Let's come back to the Euro USD. If market is pricing in for that weaker inflation number, and we should anticipate the Euro USD to strengthen because we anticipate the dollar to kind of weaken. But we have a resistance at 1.0850, for example. What if before CPI price is going to approach 1.0850, but then we have a surprise to the upside? What if the inflation is higher than 3.1%? What if it's at 3.2? Sure, there's a drop, but it's not as per consensus. Or what if it stays at 3.3%? That's going to boost the US dollar because everyone got it wrong. Everyone pricing in for the wrong thing because everyone was already pricing in for the weaker US dollar. So for this one here, we might create a limit order up top at 1.0850 because we would assume that would act as a resistance. Therefore, I want to have a sell position, right? I could have my stop loss just about there, maybe at 1.0850. Maybe my stop loss is going to be at 1.0875, for example, and I want to target 1.0750. All right. Take a look at my risk reward ratio. That's going to be 124. Right. If we anticipate a breakout strategy, right, a stop order, for example, then this is going to be more my entry. We are going to get about 1-to-1 risk reward ratio. So Euro USD for this week, we would anticipate a potential use case of a limit order, which is going to be about 1.0850. Now, if we take a look at the pound USD, we have more resistance, and this is mentioned in yesterday's outlook. There's a key level that needs to be taken out. That's going to be at 1.2850. What if, right? Price continues to go up, grinds there until Thursday, and then it fails at 1.2850, right? There's a possibility for that to happen. We look at that and say, you know what? It probably makes sense if I have a sell order at 1.2850, have my stop loss at resistance 1, I anticipate price to go back to pivot. That's a 1-to-3 risk reward ratio. Does that make sense? So a limit order could actually be a viable strategy for you guys this week, because if we take a look at the context, we're looking at the situational condition. The Euro USD and the Pound USD is approaching resistance, right? Does it have room to continue to push up? I think so. I think from the perspective that the Euro USD and the Pound USD could push up a little bit higher, we could see that happen, right? For example, the Pound USD is still above the Ishimoku cloud. We still have more room to go. It might go flat at 1.28, but there is room for this one to go to 1.2850 and potentially fail again at 1.2850. Take a look at the high yesterday. It was at 1.2845, just 5 pips off the 1.2850, which is here, very close to resistance. So it's not going to be a bad strategy to say, okay, what if price fails here? We have an order block, right? And I'm going to sell exactly at that resistance one on a pivot, have my stop loss just about there, anticipate price to go down to maybe around this area here where we see a little bit of a support there building up, right? We're gonna aim that area there. So that's going to give us 1-to-4 risk reward ratio. So this is there's a difference between a stop strategy and the limit strategy, because a stop strategy, we are reactive to the initial reaction. But the limit strategy, it obviously requires some skill, right? You need to understand how to look at it from a technical perspective. You need to know where the key levels are. You need to know where the resistance are. Otherwise, limit strategy is going to be, it's not going to be suitable for you. You can't just say, oh, market is going down, because I want to have a small stop loss, I'm going to create a limit strategy. I don't think that would apply. If you understand or you have the technical know-how, then yeah, the limit strategies are going to be useful for you. Okay? All right. So yeah, you can also trade after the news, and obviously trading after the news gives you a lot of options. You can use the buy stop, sell stop strategy, or maybe the limit orders as well. Okay? Dollar yen, yeah. Sure, I got time for dollar yen. Dollar yen, can you use a limit order for dollar Japanese yen? If you look at it on the daily perspective, I think we already kind of bounced away from 160. But if you look at it from an intraday perspective on the dollar Japanese yen, we were anticipating that breakout to happen. Then yeah, can you create a limit order? Yes, you can. You can have a limit order at about 160.75 or maybe 160.50. Those could be a good limit orders. But for now, we're already anticipating a move higher to about 127.2. So you got a couple of positions, sorry, options as well. You can look at today. Price might go up to about 160, 150, and it might stop down a little bit. I wouldn't recommend shorting the dollar against the yen at this point in time. The yen is just too strong. Too weak at this point in time. So there's going to be some profit taking, but I doubt it's going to come back all the way down like that. It's probably just going to go about like that, maybe about 161 at best, and then it's probably just going to bounce off. But yeah, a limit order on the current situation here on the dollar Japanese yen at time of doing this, I don't think it's actually a viable limit order. It's always going to be great. Limit order for this one here is going to be a buy limit, right? It's always going to be a buy on the dip scenario, at least for now, for all the yen crosses. Okay. All right. So since we are running out of time, so I'm gonna answer all this for you. Very quick test, but if you want to answer, feel free, participate with me. Well, I'll ask this question. If you want to answer it, it'd be great. I would love it. Right? All news can be divided into two categories. What are they? And what type of orders is most often used in news trading? All right, we've got 4 different types of orders there. What are the order types that we typically use during news trading? And right now, I've already explained all the pending orders to you, so you should know all 4. They're going to be 4 types, right? We have the buy stop, sell stop, buy limit, and sell limit. When should each type be used in trading? If you anticipate the support and resistance to be broken, use the stop orders. If you think the support and resistance is going to hold, use the limit orders. That's the way it is, right? So if you want to follow through in the market, use the stop orders, right? Hit the support, break the support, use sell stop, all right? Break the resistance and the market runs up. A breakout scenario, right? Think about stop orders as a breakout scenario. If you anticipate a breakout scenario, use the stop order. If you anticipate more of a range bound market condition where a support and resistance could hold, then use the limit orders. Okay, simple as that. All right, I'll answer this for you. All news can be divided into 2 categories. What are they? The hot and unexpected news, and then the periodic news. What type of orders is most often used in news trading? The stop orders, right? The buy stop and the sell stop orders are, they're more popular among news traders. Limit orders, very useful if you can strategize. Simple as that. If you can strategize, you understand what you're doing, you know how to look at it from a technical perspective, then yes, they're super useful. And one of the major advantages to this is that your stop is going to be so close to your open, all right? It's going to be so close to your entry point. You are going to have a really great risk to reward ratio. We're looking at 1 to 3, 1 to 4 in terms of risk to reward ratio, which is great, right? Breakout scenarios, it's always going to be a 1-to-1 because that's just the main logic behind a breakout scenario. We typically look at a 1-to-1 risk to reward ratio. Okay. All right. So this is going to be the code again, non-farm 2024. So make sure you're using the code if you want to deposit into your Octa trading account. It's a 100% deposit bonus. It's a double deposit bonus, however you want to rate it, right? I think you should take advantage of this, especially if you're new to trading, especially if you're new and you just joined Octa. Then yeah, use the code non-farm 2024. It's going to help you a lot because it provides you a lot of buffer in terms of opening your positions. Okay, promo code expires on the 31st of December 2024. You have a good 6 months to go. All right, any questions so far? No. Link to the Telegram route, you should get that through email, but if not, you can contact Octa's customer service. More than happy to provide you with that link to the Telegram group. Okay, but yeah, any questions for tonight? Anytime. Always a pleasure. But yeah, we will have our live CPI trade. That's going to be at the same time as this session, which is going to be on Thursday. So 2 more slips, and I'll see you guys again, I guess, for the CPI. So we will obviously talk about and explain a little bit about the inflation rate as well while we're looking at the CPI numbers, what to look out for, what's the difference with the core inflation as well. And then obviously the first half is the theory part. Second half, we're going to be doing our live trade on the CPI. And I'll probably do the theory a little bit quicker because I think the CPI, depending on the context of what the market is, there could be a potential we might actually employ a limit strategy for the CPI. Okay. So again, don't miss on the CPI because it's actually going to be a very interesting CPI, and we might actually employ a different strategy. We might not just use the buy stop and sell stop strategy. We might actually want to start positioning for longer term swing trades as well. I think the market is prime for that in terms of the condition where we can actually apply the limit orders. I think for now we could do that for the CPI. So looking forward to see you guys in 2 days time for the live CPI trade. That's going to be on Thursday, 11th of July, same time, same place. Good luck with your trades for this week, and I will see you very soon.